Producer Clover have released their half-year results that show significant improvement from the previous period. Joining me now in studio is Clover CEO Johann Vorster. Good to have you with us as always.
Thank you, Google.
Let's pick up on complimenting you. Last time you were on the show, Alec was talking about banting trends, and you told us that you're also on a fitness program and eating well. And I understand that you're making good progress as well.
Yeah, I lost another couple of kilos, so quite proud.
Exactly.
28 kilos so far.
28 kilos so far. Wow. Well, you're losing numbers in the right direction and your company is gaining numbers in the right direction. Headline earnings per share up by 41% and a nice increase in the dividend too. So you've managed to do fairly well despite the price increases. It almost seems as though consumers aren't pushing back.
Yes, we've been fortunate. We've invested a lot of money in our brands the last couple of years, and that's starting to pay off. You know, people trust our brands. Load shedding is actually helping us because people now realize that Clover brand is much stronger because it, you know, the retailers don't always have the generators in place. So when the fridges goes off, so yeah, we've been on the fortunate side. We kept on investing in the last 6 months. We spent 47 million more than the corresponding period in research, development, launches, and marketing. So it's starting to pay off.
I want us to touch on that load shedding trend a little bit more. Are you saying basically that the quality of your, fresh milk products actually last longer on the shelves despite the fridges being off?
Exactly. So if you start with a much cleaner and much higher quality product and you get temperature, then it will last longer. So our quality has always been undisputed. So when it does go off in the fridges, it does give us that extra buffer.
Exactly. But margins is obviously something that you're looking to control, especially after the significant price increases, inflation also creeping up there. How sustainable are your margins at the current moment?
It was very important for us to put up the prices and stuck to our guns. You can't go up and down, the consumer gets confused. So we got the price increases. We knew that we're going to lose a bit of market share in some volumes, in some categories, although in UHT we picked up and Mars we picked up, and of course the latest launch in yogurt's has gone very well. But on fresh milk we lost a bit, and on pre-packed cheeses. But that was to be expected, and the next 6 months the trick for us is to make sure that we balance that market shares and the premiums. You're quite correct on picking up on that.
I want to sidestep onto the drought that I understand we have been experiencing, which is impacting on the maize crops, which might impact on the feed for the cows that you actually get the milk from. Is there a ripple effect that you need to have a buffer in place for?
Most definitely. Currently, the last 3 months, the milk flow in the country was above 7% more than the previous year, which statistically and historically would mean that there's going to be a surplus in the summer, which means that prices can be under pressure. But in this particular instance, it's a bit unsure. We've had the drought, as you quite correctly said. We had a fire to one of our competitors, Lady Smith Cheese. Factory burned down over the weekend. We've got the droughts. So we've got 2 extra plants in exports of powders. So it's very difficult to predict exactly what's going to happen. But at the moment, there's no shortage in the country, like we had in last winter. The producers are getting reasonable prices, which is quite good for the flow in South Africa. So a good balanced situation currently.
Exactly. Looking at the non, that we understand that will officially be phased out at the end of this year, as you mentioned in your results. But the new product offerings, yogurt and custard, has that been made its way to the shelves, and your marketing strategy, how aggressive will that be?
Yes, we thought that the acquisition of the Dairy plant would give us about 2 years. We sold out that capacity in 2 months. So we've ordered a new line, 60 million we're going to spend. The nice problem that we have with this thing is that plant will only be in September, October, and the non is exiting our supply chain by June. So now, do you go and get other principals and fill that temporary? You can't fill it temporary. So we would like to rather tread a bit of water and keep that capacity for our own expansion. So when those machines are up. So that might be another influence on our, not the 6 months results, but the next 6 months results, which we're trying to minimize the impact of as much as possible.
And your targets for market share in that arena? For both the yogurts and the yogurt and I nearly said ultra
our
now,
competition
which is
would
exactly
not like that, but there's no reason that it should not equate to the percentage of milk that we pick up in the country, which is sometimes as high as 25%.
Operations on the rest of the continent, that's obviously still a key focus for you?
It is, yeah, but we're not going to jump in and make major acquisitions in that arena. We would like to target companies that's scalable, that we can scale up, and that will value the partnership when the services that we can bring to the party. So we're not an export distributor. But we've made some good inroads and picked up some good contacts in the areas that we are interested in: Kenya, Nigeria, Mozambique and Angola. And we're making good progress there.
Just a sidestep and ask something out of interest. The Tropica Island of Treasure is a well-documented reality show that you have. Does that correlate with maybe more market share and more analysis and gains that you make maybe in that fruit juice category?
Yeah, we've got about 65% market share in the category, and it's grown another 1% this last year. So I think the results speak for itself.
Exactly. Short and sweet then, quite clearly from Johann. Thank you so much for your time today, sir.
Thank you.
That was Clover Chief Executive Johann Vorster.